Alright, so this video is going to be more about the draw on liquidity and entries to your draw. But a good drill is going on the daily and figuring out where the next day is more likely going to go. So looking at this candle, ask yourself, where's the next candle that's going to print more likely to go, up high or down low, and then figure out why. So that's where the entry model even starts, is figure out where it's going. So for me, buy side looks good, which means I'm expecting it to get up into here. From the daily, I drop down to my 15 and I look for pulls. I see an inefficiency here. And the reason why I'm marking out this one is because it's in this bigger box. It just makes sense. So I'm marking out that one. And mind you, one thing I should have said is I'm only doing my analysis post 8:30. So let me just skip post 8:30 of the next day. So right now this is midnight. We're coming into before 8:30. So like you're gonna have more candles print, more price. Okay, I'm already seeing a pull here. And that's really it. But I still am looking up higher for my daily bias because I know I'm going to be right more times than not. And I'm going to show you guys a little drill. So we have a pull here and a pull here. Basic theory is going to tell you if you're looking to go higher, look for a run on stops. This is a run on stops. It seems like we had a run on liquidity here. Price had a market structure shift here. It gave you a fair value gap entry here to go long. It gave you another opportunity to go long here. I accidentally clicked too quick, but these two are an area to go long. And you're gonna have to rewind the video on this part, but I always say your 15-minute targets are your best. Like, so up here it's like perfect if it gets up there, but we're on the 1 and we also see a pull here. So this is how we use these levels to trade to. And right there, take profit hit. Trusting your daily bias. If you wanted to hold up to there, you might have got it. I'm not quite sure. We're already at 12 p.m. so 1 o'clock should bring us around there. And there it goes. Take profit. More about that is on my Patreon, which is in the description below. But I'm going to show some more examples on it. Another thing you guys can do to help you like actually trade is every day you see is gathering evidence. And I'm going to show you like better way to do that. So as you can see, this candle went down, this candle went down, this one went up. These are individual days to study. So we're gonna go back to this candle. We're knowing price is coming down because we already seen it. But why? You know what I mean? Why would it go down instead of up? So this is where you start to build an analysis, knowing the next candle is going to be down like that. And this is for study purposes. So equal lows here. We'll drop down to the 15. Fair value gap here. So we're knowing price is getting down here. Now the question is, where do you trade? Where do you put your stop loss? The basic shit. So let's move these to the next day. Like I said, around 9, 8 is where I'm gonna do my analysis. I prefer 9 because I don't like to get up at 8 exactly to do it. But that's on you. So for me, we're gonna go 9. On the 15, I do see a pull up here. And even though I know price is going down, I'm not going to ignore the fact that this is a pull. So I see this is a pull and I see price is going down. So now I'm going to drop down to my 1 and I'm going to just watch time. So coming up on 9:30, how we're reacting, what's going on. That's 9. This is 9:30. So price gaps up. And here's some other logic too, is like, if we want price to come down here, 9:30 or 8:30 should do your run on buy side. In confluence with that is, if price does run up here and take out whatever, whether it's this level or this level, if you hit your regular trading hours and you see a gap up, it should come down and fill that gap on its way to these levels. Now I can't see that, but that's usually how it goes. Okay, so now we have a breaker right here, and it actually didn't take out liquidity. So this could be a short opportunity. There it goes. If you missed a breaker, it's giving you a fair value gap here to short. And this is all because we know price is getting down to this level. So it's like, oh, why is this fair value gap going to hold? Why is that breaker going to hold? Like, we know price is coming down here. We've seen the candle already, but we don't know the price action in between. So it taps right into there and leaves. Retest it again. Another fair value gap, maybe for a short. And eventually using this fair value gap to go to our level. So sell side here was taken. And this was at 10:19. So how you would like journal is exactly what I'm doing. Mark out the time. Obviously, if you know the revamp, mark out the time. Then mark out the price that you see. Like you see, I'm not paying attention to inversions. I'm not looking at everything over here. I'm just using what's necessary to use, if that makes sense. Then I don't even know what's going on in these candles. I'm just doing it live, as you see. So this is enough for me. You would collect that data. Like, it didn't hit that. Now the fact that it didn't hit that, I would look at the other ones just to see. Okay, it didn't hit that either. Oh, and I have a question for you guys. How do you guys feel about Trump winning? Like, let me know in the comments. Me personally, I'm a yay. It's cool. I like it. But how do you guys feel about Trump winning? All right. So for this example, I'm gonna let you guys like guess, but it's not guessing. But guess where it's going. Now I don't know. I mean, I obviously knew price came down, but like as far as where we're gonna put our stop losses and entries, we don't know. But if you said this, that's exactly what I would have picked too. So I'll make this as a BISI. So we believe price is getting down into there. Now let's see if we're right. Okay, so price did dig into there. So we were right. So now we're on our daily. Let's drop down to our 15. And this is my swing every day. This is what I do every day. This is what ICT does every day. And then skip to whether you want 8 or 9. What time do you get to your chart? Me personally, 9 o'clock. So whatever happens at 8:30, it is what it is. Okay, boom. So 9 o'clock, price is still going lower. We're on the 15. I'm gonna go to the hourly to see if there's any inefficiency down here. This one kind of already been tested, but I'm just gonna extend this out for the whole fair value gap range and put this here for liquidity, so I know. Now I'm gonna drop down to my 1 minute. And I see a pool up here. But we're looking at price to come down here. $9.30 hit. We have this order block here. Looks like price tapped. I'm gonna wait for another reason to go short, honestly. This whole up close range, if it can get retested, I'll take that. We can either pretend I'm getting in, or we can just say if it comes back up there, I'll take it. Okay. It's not coming up there, but I'm not going to chase it either. And it's past the time I trade anyway. So for me, it would either been a no trade, or if it was real time and I seen this up close range and price trade beneath it like that with the underlying bias we're going lower, I would have took this for a short. Obviously with this tool, it goes too quick. But the purpose of like, oh, why do you get to know where it's already going? It's to help you understand that your draw is more of the time going to be right. So when you're working in your lower time frames, like your 1 minute and 5, you start to trust the daily objectives that you're already pinging, is because you spent time knowing they're going to work. And the drill I wanted to show you guys, which I think I had it on this channel, is very simple. We're just going to go like this and cut price back here. And the whole drill is to ask yourself where the next candle is more likely going to go than the other one. And that right there will help you with daily bias. This one to me is 50-50. But if there's a gun, we're not doing gun in my head scenarios, but to me, this 50-50, I don't like it. The next one might be an inside range to sell side. Inside, I was right, which means when I'm navigating my lower time frames, I'm already expecting it to be an inside. The next candle, it's in the air, but if I had to say, buy side, because it's a green up close candle, and there's a bit of a pool up here. This looks like it kind of stabbed down to maybe come up, but whatever's happening in here as far as market structure shifts will let me know. But I think buy side. Okay, so it ran up, swept, came down. Next candle, where do you guys think it's going to go? This is very obvious. In my opinion, sell side. And I just noticed long term, we have this. So I think the next candle could go for sell side, which means once I drop down to my 15 and 5 and 1, I'm already looking for bearish breakers and, things of that nature. Okay, so the next candle went up. I was wrong. 1 out of 3, which is still good. And this is not a good environment to even try to determine where the next candle should go. But this is the drills I do to help me get my daily bias right. And this is sloppy. This is bad. I look-y don't even want to do it in this, but I'm still going to do it. Pull here. Next candle, I'm going for sell side. Boom. So that means lower time frame, you would look for your 8:30 or 9:30 to go against the trend. And let's see if we can get down in the 15 and see that. Bet. Exactly. So look at what happens before 9:30. It goes against the other way. Then 9:30 will shoot it down, taking us on side. And one thing too, to these levels, they're leaving pools. Like this. So if this video helped, drop a comment. Let me know your thoughts on Trump winning, which I'm cool with it. And if you want to learn more about how to enter and how to trust this, there is a Patreon down below.